Hi, it's Jessica DaMassa with WTF Health. Joining me right now, I have Robert Garber. He is a partner at 7Wire Ventures. So Robert, it's a pleasure to have you with us.
Great. Thanks so much for having me.
Okay, so those who in digital health have no idea who 7Wire is or who they have invested in, Livongo, why don't you go ahead and introduce 7Wire to all of us and tell us a little bit about the fund, in particular, what kinds of businesses you invest in other than, digital health leading
winners.
IPOs, right?
Yeah,
just winners. All right.
No, that's great, and I thank you for having me here. It's great to spend some time at JP Morgan here. 7Wire is an early stage fund based in Chicago, focused purely on early stage investing, really around our investment thesis, which is focused on what we call the informed, connected health consumer, which really is centered on our belief that we need to put tools, technology, information in the hands of the end user, so that we can all be better stewards of our care and our spend, be more proactive, better self-managers, and take responsibility, both physiologically and financially.
All right.
So everything we do really is designed with working with payers, providers, employers, pharma, but with the end idea that we really need the consumer to be empowered. And obviously, Livongo is a perfect example of that, where we work with employers and payers to put a set of tools in the hands of people who suffer from chronic disease, and then allow them to use that information in real-time intervention to better self-manage.
Okay. Who else is in your portfolio?
So obviously, I think nobody knows Livongo, right? So,
No.
so they're new. Other interesting companies include OM1, which is based in Boston, Higgy, which is a network of 11,000 kiosks across the country in retail health, collecting 1 million data points a week, meeting people where they are. Recovery One, which is a leader partnered with Cigna on the musculoskeletal side. And then I just came today from a Medicaid conference put on by one of our portfolio companies called Consejo Sano that is working on multicultural engagement, primarily working with managed Medicaid and some Medicare providers. So, and these all line up along our swim lanes, which are really focused on chronic disease, aging and aging at home, vulnerable populations, which includes Medicaid and social determinants of health and multicultural and people who are struggling with access and gaps in care. And then lastly, personalized medicine, which is really how do we move the healthcare system from a cohort-based one to an N of one. So that even if you and I both have a family history of cardiovascular disease, we're pre-diabetic and we have high blood pressure, that's about where the similarity ends, right? Like we're very different, far more different than we are similar.
Right.
And yet our system really still thinks about people as cohorts.
Yeah.
And so we're really thinking about how do we take all the real-time data, genomic data, family history, physiological data, microbiome, fitness, nutrition, and create a more personalized, tailored experience for primary care over time.
All right. So I want to pick your brain about where the market is headed because, now that I know you have a reputation for picking winners, right? So I'm curious to hear, your thoughts on where digital health is going to be this year. You've been investing in this space for a long time. You said last year you guys saw how many deals? 3,000 was it?
3,000.
3,000 deals. What were those like? Like what kinds of companies are rising to the top? Voluminous. That's a great word.
Voluminous and lacking in differentiation.
Oh, no. So why were they all the same? Like what kinds of, are you seeing the same solutions over and over? Because I feel like, even with Livongo, chronic condition management, there are so many of them, and it feels like the market is getting saturated. Leaders are emerging, and it's like, why, if you're a startup, are you going to get into this? How can you differentiate enough to gain that ground? So what are you seeing?
It's really challenging. I think the early part of the digital health market was really focused around specialization and very narrow point solutions that addressed a particular need and did a good job of it. But what happened is that these illnesses, ailments, conditions don't live in isolation, right? So just because you have obesity, you may have diabetes, you may have heart disease, you may have behavioral health issues, and you can't just treat one of them.
Right.
And so that's how Livongo evolved, was really about whole patient. But then we've seen in every other category where people are complex. When you're young and you're healthy and you have one thing, that's one thing. But as people get older, they become polychronic, they become frail, and they have all kinds of complexities. And we need to think about that from the whole patient perspective. And so I think next year, or now it's this year, we're going to continue to see, my belief is a consolidation, not just in terms of number of companies, but the types of solutions, and more migration to platforms and away from point solutions, and an idea that you can stitch together the experience for the consumer. Because I think one of the things we know that changing consumer behavior is hard. Getting people to engage is hard. People aren't going to use 4, 5, 6 different solutions to address whatever series of concerns they have. And by and large, people feel ignored, abused, and disenfranchised from the system.
Yeah.
So
even the system. I mean, they're not going to pay for all of this stuff.
That's right. And then the question is who's going to pay, because
Right.
the consumer isn't going to pay.
Yeah.
Right? So that's why we spend most of our time working with the existing supply chain, is because that's where the money is and that's where the lives are.
Right.
And so we have to create a win-win for the payers, the providers, the employers, the pharma companies, and then also for the consumer. And then connect the dots there so that there's an ROI, but then also you can make sure and say you've got consumer empowerment. And I use the word empowerment, not engagement, just to be clear, because I see them very differently.
Okay.
Engagement is when somebody's trying to get you to do what they want you to do, right? So the idea that your provider is going to ping you 3 times a day and tell you to check your BP, all that does is remind you you have a chronic disease.
Right.
Right? How many times do you want to be reminded?
Not at all.
Never. Right? Right? Our goal is to make healthcare more transparent, not more front and center. Right? And so empowerment is how do we put the tools and the information and technology in your hands,
Right.
so that you can do it. And then, by the way, we'll show you how it helped you. Create the feedback loop so you'll want to do it.
Do you think that the industry as a whole is going to end up moving more toward this really consumer? I mean, we keep saying the healthcare consumer, and it's like I think everybody says that and then kind of rolls their eyes because it's like really how much of a consumer are they of health? But it's like in your vision of this, I mean, empowering the patient, empowering the consumer to be able to be in control and make some decisions. Do you see that as something that's going to continue to move forward, or do you think that the established healthcare players, like we've been seeing actually this year, I mean, they're starting to kind of step up and into digital health. So, I mean, you had Express Scripts, go ahead and create that digital health formulary. You know, you're seeing like some of these other players and even retailers, CVS, kind of integrate in a lot of digital solutions. So do you think that like the industry is going to kind of help empower the consumer, or are they just going to merely kind of continue to keep trying to engage them?
Well, we've made a big bet from a thesis perspective, from a firm perspective on the consumer's role, so we're big believers in it.
Yeah.
It's not the only solution to the system, but it has to be part of the solution, right? Right now, consumers have more information about how to buy a car or a microwave and whether the quality is good and whether the value for the dollar is good and whether it will last than they have picking a doctor.
Right.
And that's just a reality. And as I say, our system did a really good job of getting us all drunk on $20 copays, right? And now undoing that is hard. It's difficult, and so and right now consumers are having more and more of the financial responsibility, and so that naturally drives a more consumer-driven behavior. But it's hard for them to act in a consumer way, much the way they do in other consumer products, without all the information.
Yeah.
That said, it's not enough just to expose them. So somebody asked me yesterday about price transparency. It's like, all right, great, that's good, it's needed, but there are lots of indications that that's not enough.
Right.
Right. It was sort of, I drew the analogy, I don't know if you remember when the restaurants put calories on menus, there was a huge uproar that people are going to stop buying all this stuff. And in New York particularly, I remember the Restaurant Association was up in arms because they say, wait a minute, Frappuccino is 1,000 calories. No one's going to do it. You know what? It had no impact whatsoever on consumer behavior.
No, absolutely.
Right?
Yeah.
So we know that just putting the information out there doesn't create change, because you have to connect the data with actionable information and with feedback and results. Right. Part of the reason like diets fail is because it takes 6 months to see results. Right.
Right.
We're an instant gratification society, and so the challenge with getting consumers to engage is that we need to connect the action with the result in a much closer proximity.
Yeah, speaking of instant gratification, this health tech market investing in this so instant, right? I keep hearing there are a lot of companies that have been around in this latest wave, let's call it, of digital health, right? So you've got like Collective, you've got Clover, you've got a couple of companies that have been around for an eternity if you were comparing them to a regular tech company. Are we going to see a lot more exits, you think, this year? I keep hearing that's what's going to happen. Either you're going to see people IPO like Livongo, or you're going to see like mergers and acquisitions, like we just saw Teladoc acquire InTouch. So, and what are your thoughts on that? Do you think the market's going to start collapsing in on itself like a dying star? Or no, I'm joking. I'm joking. What do you think?
I lived through the last downturn in the early 2000s, and I don't think we're there.
Okay.
But I think we're going to see a few things happen. I think, one, I'm starting to hear whispers of a flight to quality.
Okay.
A focus on profitability, or at least a path to profitability, and a strengthening of balance sheets.
Okay.
And so I am a firm believer that Darwin is alive and well in the venture market, right? And there is a survival of the fittest, and the best tend to win. So I think how that'll manifest from an exit, the strongest, as long as the IPO market continues to be strong, we'll continue to see the best of the best be able to get out. There will be some consolidation, either based on a product fit or based on the fact that some have stronger balance sheets and some are not able to raise capital, and that leads to consolidation. And then I think, M&A markets, as long as there continues to be a lot of available cash and cheap credit, will drive M&A.
Okay.
When I started doing this 97, 98, like private equity was just another part of the asset class. They had nothing to do with venture. And now they've been bidders in every one of the deals we've looked at over the last 10 years as buyers, and they have a lot of cash. And so I continue to see roll-up opportunities and PE-backed healthcare businesses being aggressive acquirers because they're sitting on so much available money.
Yeah, I keep hearing that too, that there's just so
It's
much
true.
available money.
It's true, and the problem with that, I also think, is it leads to a little lack of discipline. We're seeing valuations go too high. We're seeing rounds get too big. There are a lot of things about that seem unsustainable. But healthcare is a very resilient sector, and so I don't have concerns that this market's going away. It's a $3.5 trillion business today just on the healthcare side, another $3.5 trillion on the wellness side, and then 18 to 20% GDP. Like, it's not going anywhere, right? So the question is really how quickly can some of these new solutions actually start to have impact at scale?
Do you think we've hit a turning point with that? I mean, I feel like this last year, I feel like the healthcare incumbents have been making some moves to try to integrate this stuff in. We saw Express Scripts launch that digital health formulary. You're seeing payers start to reimburse this stuff in different ways. I don't know. What's your opinion?
I don't know if I'd say it's an inflection point.
Are we at least moving in a positive direction?
No, I would say it's encouraging. I think everybody's been watching what the non-healthcare players have been doing, the Walmarts, the Amazons, the Best Buys, and then you have sort of the CVS bet with Aetna. And I think that's all really geared towards this movement of meeting us where we are.
Yeah.
Right? So, like, if you look at all the surveys around what motivates consumers, interestingly enough, cost is not number one, it's convenience. And so when we think about what's going to become increasingly important is going to be convenient, personalized, tailored solutions that address my suite of needs in a holistic way, right? Like, I don't want to go here, 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 and here to do this. I want to have it all one place, convenient, data shared between the two, which is a whole nother issue. But, and ideally with the goal of getting me healthy.
Yeah.
Like, the goal here is to get in front of these diseases, not wait until they catch up to us and then they become chronic and expensive and debilitating.
Last thing for you.
Yeah.
Curious to hear, speaking of Darwin, we're hearing about a lot of the healthcare incumbents who had venture funds. Some of those venture funds are going away. What are your thoughts on that? How does that impact you?
I don't know how much it impacts us. I have a very mixed feeling about corporate venturing in general. I think.
Ooh, tell us.
I think there are great examples of firms that have done a really good job over a long period of time. I think one of the big question I always have is what kind of a commitment do you have to strategic investing? And so the place where I struggle a little bit is when the market gets frothy and new entrants pop up because they think it's easier, they're missing out, or that they want to start building an equity portfolio and they don't have the team or the expertise to do it. And then those efforts disappear. As opposed to, there are plenty of examples of people who have been in market doing this for many, many years. The Cignas, the Cleveland Clinics, the Intermountains, the Provident Health in Seattle. I mean, there are lots of examples of really good corporate investors. But when you start seeing sort of the less traditional ones sort of flooding in the market, it's usually not a positive indicator.
All right. We'll see what happens.
Sorry.
Sorry, it's okay. No, I'm glad to hear it. I'm glad to hear it. So overall, are you optimistic on this year?
I am.
We should end on a positive note.
We couldn't be more optimistic.
Yeah.
This industry continues to be so antiquated and behind, and the use of technology and these new tech-enabled services to really change health and wellness, and to do so in a way which is consumer-driven and not focused on putting a line in the pockets of pharma and payers and providers is new.
Awesome.
It's new, and that's how. The bizarre thing to me is every other consumer market gets that. The airlines target me, the hotels target me, the grocery stores target me, Amazon targets me. So why is health any different? And we don't want it to be different.
Awesome. Well, we are excited to see what happens next with Seven Wire. Thank you so much for stopping by and chatting.
Thank you so much. I
It's a
appreciate
pleasure
it.
to hear your perspective.
Thanks.
I'm Jessica DaMassa with WTF Health. Thank you for joining us.